Investing is one of the most powerful tools for building wealth and achieving financial independence. With numerous asset classes available, including stocks, cryptocurrencies, real estate, exchange-traded funds, and options, investors have more opportunities than ever before to tailor a strategy that fits their financial goals, risk tolerance, and time horizon. Understanding the nuances of each investment type is essential to making informed decisions, avoiding common pitfalls, and maximizing returns. A comprehensive guide to stocks, crypto, real estate, ETFs, and options reveals the dynamics of each asset class and how they can be used individually or together in a diversified investment portfolio. Stocks represent ownership in a company and are one of the most traditional and popular forms of investing. When you buy shares of a company, you become a shareholder and gain the right to a portion of the company's profits through dividends, as well as potential appreciation in the value of your shares. Stock prices are influenced by a wide variety of factors, including earnings reports, economic indicators, geopolitical events, and investor sentiment. Investors can choose between individual stocks, which offer the potential for significant gains but come with higher risk, or diversify through mutual funds and ETFs that contain a mix of stocks. Over the long term, stocks have historically delivered strong returns, but they also experience periods of volatility and short-term losses. To succeed in stock investing, it's important to research companies thoroughly, understand the industry landscape, and have the discipline to hold through market fluctuations. Timing the market is notoriously difficult, which is why many investors choose a long-term buy-and-hold strategy or use dollar-cost averaging to invest steadily over time. Cryptocurrencies, or digital assets based on blockchain technology, have gained popularity as both speculative investments and alternatives to traditional financial systems. Bitcoin, the first and most well-known cryptocurrency, paved the way for thousands of other digital currencies like Ethereum, Solana, and Cardano. Crypto assets can be highly volatile, with prices driven by innovation, regulatory developments, investor interest, and macroeconomic trends. Unlike traditional currencies, cryptocurrencies are decentralized, meaning they are not controlled by governments or central banks. This decentralization appeals to investors seeking transparency, security, and freedom from traditional financial intermediaries. However, the crypto market remains relatively young and susceptible to sharp price swings, regulatory uncertainty, and technological vulnerabilities. Investing in crypto requires a high risk tolerance and a willingness to stay informed about rapidly evolving trends. Investors can buy and hold digital currencies in wallets, trade them on crypto exchanges, or invest in blockchain-related stocks and ETFs for indirect exposure. Security is paramount when dealing with cryptocurrencies, so using reputable platforms and hardware wallets is essential to protect your assets. Real estate investing offers both income and appreciation, making it a staple in many diversified portfolios. Unlike stocks and crypto, real estate is a tangible asset, which provides psychological comfort for many investors. Residential and commercial properties can generate consistent rental income, while property values tend to rise over time with inflation and demand. Real estate also offers powerful tax advantages, including deductions for mortgage interest, property taxes, depreciation, and maintenance expenses. Investors can buy properties directly, manage them themselves or through property managers, or invest passively through real estate investment trusts, also known as REITs, and crowdfunding platforms. Direct property ownership comes with responsibilities such as tenant management, maintenance, and upfront capital requirements. However, the potential for cash flow and leverage can make real estate a highly rewarding investment. REITs allow investors to gain exposure to real estate without owning physical properties. These publicly traded entities invest in income-generating real estate and pay out most of their profits as dividends, making them attractive for income-focused investors. Real estate performs differently than stocks and bonds, often making it a valuable diversifier in a balanced portfolio. Exchange-traded funds, or ETFs, are a flexible and cost-effective way to invest in a diversified basket of assets. Traded on major stock exchanges like individual stocks, ETFs can include a variety of asset classes, such as equities, bonds, commodities, and real estate. They are designed to track the performance of a particular index, sector, or investment theme. For example, an ETF might track the S&P 500, emerging markets, clean energy, or specific industries like technology or healthcare. ETFs are known for their liquidity, transparency, and low expense ratios, making them an ideal choice for both novice and experienced investors. One of the biggest advantages of ETFs is diversification, which helps reduce risk by spreading investments across multiple securities. They are also highly accessible, allowing investors to build a diversified portfolio with just a few trades and minimal capital. Some ETFs focus on growth, others on income, and still others on defensive sectors that perform well during economic downturns. There are also thematic ETFs that cater to specific trends, such as artificial intelligence, renewable energy, or blockchain technology. Whether you're seeking aggressive growth or conservative income, there's likely an ETF that aligns with your investment strategy. Options are advanced financial instruments that give investors the right, but not the obligation, to buy or sell an underlying asset at a predetermined price within a specified time frame. There are two main types of options: calls and puts. A call option gives the investor the right to buy an asset, while a put option gives the right to sell. Options can be used for speculation, hedging, or generating income. While they offer flexibility and leverage, options are complex and carry significant risk, especially for inexperienced investors. Speculating with options involves predicting price movements within a set time frame, which can result in substantial gains or total loss of capital if the market moves against your position. On the other hand, options can be used conservatively, such as using covered calls to generate income on existing stock positions, or protective puts to limit downside risk. Understanding the Greeks, delta, gamma, theta, and vega, can help investors analyze how options respond to changes in price, time, and volatility. Mastering options requires education, practice, and a clear understanding of risk management. For those willing to put in the time, options can be a powerful addition to a diversified portfolio. Building a successful investment strategy involves combining different asset classes based on your financial goals, risk tolerance, and investment timeline. Younger investors with longer horizons may favor growth-oriented assets like stocks and cryptocurrencies, while those nearing retirement may prioritize income and capital preservation through bonds, real estate, and dividend-paying ETFs. Diversification is key to managing risk and smoothing out returns over time. Rebalancing your portfolio periodically ensures that your asset allocation remains aligned with your goals, especially after significant market movements. Staying informed is another cornerstone of effective investing. The financial markets are dynamic, and global events can have far-reaching impacts. Keeping up with market trends, economic indicators, company earnings, and regulatory changes enables investors to adapt their strategies and make informed choices. It's also essential to maintain a long-term perspective and avoid reacting emotionally to short-term volatility. Emotional investing, such as panic selling during downturns or chasing hype-driven trends, can erode wealth and undermine financial goals. Education is a continuous journey, and resources like financial news, podcasts, books, and online courses can deepen your understanding and sharpen your skills. Working with a financial advisor can provide personalized guidance, especially when navigating complex instruments like options or when planning for major life events such as buying a home, funding education, or retiring. Investing is not about overnight riches, but about building wealth methodically and intelligently over time. Whether you are interested in the high potential of cryptocurrencies, the tangible cash flow of real estate, the historical reliability of stocks, the convenience of ETFs, or the strategic flexibility of options, each investment type offers unique benefits and challenges. By understanding how they work and how they complement each other, you can craft a well-rounded investment approach that adapts to your changing needs and ambitions. In the end, the key to successful investing lies in patience, discipline, education, and a commitment to your financial future.